everybody. Welcome to the Trading Market Technicals morning call video for Thursday, December the 5th. A little bit of a choppy session yesterday in the markets. Dow Jones down 24. At one point, the Dow was up, I believe it was 40 points, down 100 to be positive, almost flat on a day to end down 24. So pretty whippy session yesterday, but again, on low volume. I'm going to get into that in a moment. NASDAQ up 80 cents. S&P down $2.34, and Russell down $2.40. So I started to do a little bit of historical research to see how does December usually play out. Now I showed the repetitive patterns. We've had 2 to 3 days down and the markets rally. I showed that to you yesterday's video. So the markets were down 3, was starting to be down 4, and the markets actually pushed higher at the end of the day. Now, there was some chatter on the trading desk that Goldman Sachs, Hans, one of the analysts out there, put out a sort of a negative note about the federal government, come to some sort of an agreement, but he thinks that there's a lot more work to do, yada yada yada. It was a bunch of chatter. However, that sold the market. To me, it doesn't matter. It's what I'm looking for is what price is telling us, not what some chatter in Goldman Sachs came out with some sort of a note. But I did look deep further. I looked further into December's price action. How does December usually fare? Well, December is the strongest month of the year. So we've had some consecutive losses at the beginning of December, and I started looking deep, and we looked at an average. December is typically one of the strongest months of the year, and with the S&P recording gains of 45 of the past 60 periods. So 45 of the last 60 years, loss of this month was very, very rare, making a 3 consecutive losing streak quite notable. So we need to look at that in the sense that, yes, it is notable, but we do have to go back, and if history repeats itself, December will probably be a pretty good month, and will probably end up pretty well to the upside. Now, remember, there is tax selling that comes in towards the end of the year, and we are going to have some down days. Could this be, basically that the market pulling back? Well, as far as when I made the comment, markets pulled back very, very low. It was a very shallow pullback, and with virtually no volume and no downside break. We did break that 1797 in the ES I mentioned, and we did hold that 1780-ish area, I believe it was, that I mentioned earlier. Let me just double check here, and I think, yes, it was 1780-ish. We broke down to 1777 yesterday, and then we actually rallied pretty hard. So we dipped lower, and then we rallied into the close. So that 1780-ish area is holding. So as long as that area holds, I think you have another shot to at least test the highs, if not make new highs going into the end of the year. I don't see a big, massive liquidation here, run to the doors, at least not for December. I do think maybe the markets may be in for a little surprise for the earlier part of 2014, and then possibly rally again. But we shall see. We have 2 Fed governors speaking today, and they're pretty hawkish. So let's see if that downplays the market, or at least caps the market to rally today. And remember, we have the non-farm payrolls that come out tomorrow, which is going to be a big number. We also have a couple of POMO auctions, permanent open market operations, which the Federal Reserve, that's what they do with their quantitative easing program. So that's going to also kind of boost the stock market here. We have several double POMOs along with the Fed governor speaking, and then non-farm payroll. So it should get interesting. I was looking forward to see if the markets were to dip a little bit lower into the 1740-ish area. That still may happen, but I'm still cautious. Still cautiously optimistic to the upside, but with extreme overbought readings and the tick and a lot of the internals telling us that we're pointing lower, I have to use caution here in trading, because of the fact that we don't have all cylinders firing off at the same time. So we have mixed signals, and when that tells me, say, okay, you know what, let's step aside. Ultimately, price is king, right? Indicators lag price, they're secondary to price. But The reason why we look at indicators is to say, well, something's going on here. Let's wait and see if the indicators can realign itself to what price is doing in the marketplace, and that's what we're looking for, right? I want to get into let's get into these indicators. I want to show you what we're looking at, and a lot of these are going to be repetitive intraday because I need to show you what's happening. And now we have the tick here. So we have the tick, and the tick has now basically making lower lows and lower highs and staying below that zero. And that is something that's, again, a red flag. Does it mean to go out and short the market? Absolutely not. Does it mean to liquidate your long portfolio? Absolutely not. It just tells you that internals are starting to break down here. Stocks above the 50-day moving average. Showed this to you many times. This is the area where usually we have some sort of a market sell-off. We are on a sell signal. Has it happened yet? No, it has not. It doesn't have to happen. I'm just saying that we need to be cautious here. Okay, let's take a look at, this is interesting. Let's take a look at New York Stock Exchange new highs. I showed this to you yesterday as well. We ticked +3. I mean, this is, so if the markets are rallying, and I've mentioned this many times, it's not the stocks. Yes, there are a handful of stocks that are rallying. Most stocks either make their move with a gap up or gap down, a little bit of movement, and then it stays in a zone pretty much most of the day. And that's what a lot of the day traders have to be dealt with. Now, if you're brave enough to hold positions overnight in the overnight session, which to me at these lofty levels is a little bit dangerous, but if you're selling a put credit spread or a call credit spread or something like that to that matter, that's absolutely fine. That's what you want to be doing instead of right out being long or short an individual stock or an index or an ETF. But anyway, back to this, we have a +3. So this is not great. This is, we're at all-time highs, but yet stocks aren't making 52-week all-time highs. So that's a concern to me. Okay, let's take a look at the new lows. New lows hasn't broke out of the zone, which I mentioned, but we do have an inverted head and shoulders here, right? Left shoulder, head, right shoulder, and we are ticking higher. So this, to me, says this is also a word of caution. Now, if we start to break much lower again and really roll hard, while our New York Stock Exchange 52-week highs are making new highs, that's a different story. Then everything's starting to realign itself, and then we can be buying and accumulating pullbacks on uptrends. So that's something that we need to talk about. Here is the bullish percent, SPX. This actually went on a sell signal again. Now, mind you, this has been very whippy for the latter part of November and into December. So we've got a buy signal, a sell signal. We back up, sell signal, buy signal, and back on a sell signal. So this thing has to obviously work itself out. So I'm not too worried about this one in particular, but again, something that needs to take note. Okay. Now let's take a look at the VIX. Now the VIX had a beautiful bounce up off the lows the last 3 days and put another black candle. Black candle means usually a pause or a reversal in stock charts. So let's see if we do reverse. Now we did break through that 50 and 200-day moving average. So let's see now if we get some sort of a pullback, make a higher low off this low, and then go higher, which would again put equities under pressure again. But right now we have a black candle. So, and we are at support on a lot of these sectors, which I'm going to show you. So I am looking at or anticipating some sort of a bounce today going into Friday's non-farm payroll. Now, all bets are off for tomorrow. Whatever non-farm payrolls come out to be good or bad for the market, I believe that's where that trend is going to be for tomorrow and probably into the next week or two before we start to unwind our Christmas holiday season. Okay, so now let's take a look at some of the sectors that we follow. Prior to that, let's look at gold and let's look at crude oil. All right, now gold had a big day yesterday. This is, I am looking for a short in gold. If we can get another follow through day, maybe up another $15 or $20, this is where I am going to look to short gold with a stop just above the neckline, or depending on your trading plan and your account size, maybe back above the 50-day moving average. But this is looking better for a short play. Again, we are still making lower lows and lower highs off of this high, off of this high, lower high, lower high, lower high. Bearish symmetry still intact. Now, of course, we're going to get some reversal patterns and some dead cat bounces. That's when you want to initiate shorts, not to go long saying that gold is in fact now bottom. I believe that it has not, and I do think that we're going to see probably anywhere from 1,000 to 1,150. Obviously, if not this year, in 2014. Gold is in a bear market. Now, let's take a look at palladium. This is really what moves all the metals, and I mentioned this many times. Palladium had a big move up as well. If you're going to look to do anything in gold, look at what Palladium does. That is the true leader in the metals. And if Palladium can muster itself up to get up to this upper trend line of the symmetrical and start to fail, that's going to tell us to get short gold. Okay, so that's just going to be your confirmation here in gold. Now let's take a look at WTI crude. Now, as you know, I've been a big bull in crude oil, and I love the crude oil here. I love it. I think it's a nice big move up. I've been mentioning here we're at the 20-day lows. Yes, we a little bit of choppiness here for pretty much of November and into December, but we did take out, we cleared this resistance area of 95, I believe 50, and now we're trading back up in here. Now we did get that death cross, that 50 and a 200-day moving average. That's a very bearish crossover in the moving averages. We have to consider that. Remember, we did clear, though, however, this bearish symmetry down, making lower lows and lower highs. That is a big bullish sign. Now, what we want to do, we want to buy the next pullback. I'd like to see this come back into this 95, 95.50 area, create some sort of reversal, and then look to buy it for a longer term hold, maybe into 100, maybe back to this 50% area, or even back into that 50 to 61.8% within this area would be the targets. Okay, I don't think gold. I'm not sure that crude oil will go to 112 again, but you have a healthy retracement back up to these areas. Now let's take a look at USO. Now here's the only thing. Again, this is just an indicator, but this is the bullish percent ENER based on a point and figure chart. Okay, this is on a sell signal, and this is that's the only concern. This is a very reliable indicator. Yes, it has been chopping around a lot. Actually, the latter part of the year, but this is on a sell signal. So if crude oil can now maybe start to sell off a little bit and pull back, and this starts to come in as well, and maybe base back in this 55% area and start to move higher, that would be a stronger buy signal for me to really load up on some out-of-the-money calls or even start accumulating USO, which would be the benchmark for crude oil, okay? There's other ETFs out there as well, but this is most liquid. So keep an eye on that. But I do like this. I wouldn't want to be chasing up here. So I have no trade in crude at the moment, but I am looking for a pullback to enter in the USO, okay? Let's take a look at the chart segment now. Going into the spiders. 3 days down, rally. I showed this the other day. 2 days down. We had 3 days down. We rally here right off. That's the October 9th low. We had 4 days down, and then we actually paused and we've sold off again. Pretty unusual. But you get what I'm looking at here. We have pattern recognition. Do we rally? I think we probably rally. We are into a 20-day moving average. You're coming into some support. So I think here logical spot would be at least a retest, or maybe a bounce for today and then reevaluate for tomorrow. Again, remember, all bets are off for tomorrow with non-farm payrolls coming out. Diamonds are starting to pinch here. Look at the Bollinger Bands. Again, at the 20-day moving average, logical spot for a bounce. So this is what I'm looking for. I'm looking for some strength today, and then we'll see what happens for tomorrow. But I'm looking to buy pullbacks on some of these stocks that have pulled back into some good support zone areas. Transportation, IYT, again, right into the 20-day moving out. You see what I'm looking at here? Pattern recognition here. So we do have a lot of this, a lot of these sectors that we follow sitting on the 20-day moving average. Now, if we reverse and break down lower, and we break that low from yesterday, which would be the 1777.75 in the ES, then I think you're going to have a deeper downside correction. But until that happens, you have to say, prove me wrong, And again, 20-day moving average, IWNs, did get a decent little pullback. But again, the volume here wasn't that great. In the IWMs was a little bit more. We had volume greater for distribution than we did on the other sectors. But that's normally the case anyway, because it's usually a good gauge of risk on, risk off. XLF, I like the banks. I like the banks on a deeper pullback. Going into 2014, I think the banks here are going to be a good buy. Look at this again. XLF, the ETF banks and financial, sitting on the 20-day moving average. And we got better volume here. I'd like to see a little bit of a deeper pullback to the 50-day moving average, kind of unwind these momentum indicators, the MACD and stochastics. That would be a better buy signal for me. Nothing wrong with accumulating, but we haven't really sold off that much. Take a look at Goldman Sachs. Again, Goldman acted very, very well, and it hasn't even gotten to its 20-day moving average. J.P. Morgan, same thing, as you can see here, still above it. We actually had a big reversal in J.P. Morgan. So J.P. Morgan is definitely in play and is actually being accumulated. No question about it. I'd like to see it push at least back to this little gap area from this break out of the symmetrical triangle, anywhere from 55.30 to, let's say, 55.70. Give or take a couple of pennies here. I'd like to see this come down one more day, one more time, and then maybe chop around here and start to head higher and take out these highs. But I like J.P. Morgan as well. And here's the IGN, one of the networking sectors. Again, having a tough time selling off here. Okay. One thing I wanted to show you was the SOX. This is the semiconductor sector. Now, same thing. If you remember the banks, the BKX, very similar. This is holding up very, very well. Okay, this actually puts a feather in the bull camp that we are not breaking down with some key sectors, banks, transports, and of course tech. That's holding up well, and that's what we need to continue this rally if we want to see higher highs here. So again, this is acting well in this is semiconductor index. So this is acting very, very well. We need technology and financial to move higher. So I think the path of least resistance right now is higher. We do have risk to the downside because all you need is a couple of down days to push this market lower, and I think a lot of people will start locking in profits. Remember, there's a lot of people long at these lofty levels here, so you got to use caution. But again, just wanted to show you. So we do have a mixed bag, right? We have a lot of these sectors doing okay. They're holding up well. They're holding above their 20-day moving average. But we have our indicators, which lags price, are telling us that, hey, use caution here. So my thing is, take a step back. Let's use extreme caution. Look for the best trading setups and follow your trading plan. It ultimately will get you out of any difficulty in the marketplace, at least reading the markets. Okay. All right, guys. Apple here holding up very well. Pullbacks in Apples can be bought right now. Can be bought. I'd like to pull back better to the 8 here. We're way extended. I would not be chasing Apple up these levels. And lastly, of course, is the Qs. As you can see, technology doing well, not even to the 20-day moving average. All right, guys, that's pretty much it. Let's see what happens today. I'm looking for a push higher into today, and then again, all bets are off for tomorrow. News will trump the charts. Non-farm payroll, big number, last month of the year for Ben Bernanke, and again, I think he sits on his hands. I think he does nothing. And we do have the two Fed governors speaking today, so could move the markets a little bit. So just keep that in mind as well. Have a great day, everybody. We'll speak to you tomorrow. Take care.